Riley from American Retirement Advisors with a weekly market update. Markets reached new highs last Thursday, boosted by reports that U.S. and China were all ready to announce trade deals and have continued to rise this week, with the S&P up 0.77, the Russell up 0.3, and the Nasdaq up 0.93. Now, overseas markets performed better, with developed markets, the EFA at 1.72 and the MSIC at 3.63 for the week. In U.S. technologies and consumer discretionary sectors were the best performers, while real estate and communication services lagged. Now, in fixed income, Treasury yields climbed following reports of a U.S.-China trade deal, increasing the potential for rising global economic growth, and the European Central Bank confirmed that monetary policy would stay easy or highly accommodative under the new president, Christine Lagarde, leaving its benchmark deposit rate at a negative 0.5. And the Federal Reserve, as expected, kept interest rates on hold at their Wednesday meeting and indicated that interest rates would stay lower for longer unless there was a sustained increase in inflation. The benchmark 10-year Treasury rate declined 2 basis points to 1.82. Talk about commodities. The U.S. dollar has weakened in recent weeks against a basket of currencies, down 2.2% since the end of September, pushing up prices of commodities since they are priced in U.S. currency. So the U.S. bond, the British pound in particular, moved higher against other currencies following the current Prime Minister's electoral win, with his party's sizable majority in seats in Parliament, ensuring enough votes to pass the Brexit agenda, viewed as positive for the British economy. Baker Hughes reported active U.S. rig drilling for oil rose 4 to 667 this week. That followed declines in each of the last 7 weeks. So oil prices finished the week at $59.78 per barrel, up 1%. Now, in economic data, the U.S. and China agreed to phase 1 of a trade deal, including the avoidance of U.S. tariffs on $150 billion of Chinese goods that had been expected to go into effect this week, maintaining 25% U.S. tariffs on approximately $240 billion worth of Chinese goods, with China buying at least $50 billion worth of agricultural goods from the U.S. in 2020. Now, the agreement must get government approval in each country before it can be finalized. Retail sales came in lighter than estimates, rising about 0.2% in November. The weakness is likely because of Thanksgiving being so late and with just 2 days of shopping until the 30th. More telling, we believe, will be the combined November-December numbers. When they become available, we'll see how that works. Company news: Bristol-Myers Squibb, which is a Core Select and a G50 holding, was awarded $752 million in patent infringement dispute with Gilead Sciences over a patent exclusively licensed to BMY from Memorial Sloan Kettering Cancer Center. So their shares rose 6.5% for the week. Las Vegas Sands, a G50 holding, rose 7.6% for the week, based on expectations of revenues and earnings as a result of the trade relations between U.S. and China. They have a resort, approximately 60% of their pre-tax profits come from Macau, China. National Grid, which is a G40 holding, gained 6% last week, responding to more positive economic growth outlook from Britain following the elections, and the electricity and gas utility company is focused on transmission and distribution activities in U.S. and U.K. Taiwan Semiconductor Manufacturing, which is a G40I holding, shares gained 6% last week after reporting a strong 9.7 year-over-year gain in 9.7% return. So November year-to-date revenues were up to 2.7. 8 shares also gained. U.S. trade deal was reported. So if you have any questions on recent market news and how it affects your portfolio, give us a call at 855-756-5700. We want to wish everyone a happy and blessed Christmas. We will not be doing the commentary next week, but we'll right before the new year, we'll do another commentary. So we want to wish God bless you to spend time with your families in this blessed season, and we look forward to talking to you soon.